Hi everyone, and welcome to the 17th episode of the Market at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So in the previous videos, we talked about the voice, and you mentioned that my voice had an issue. So as a result of that, I decided now to try headphones to see if we'll get a much better voice. So that being said, let's progress. So once you join in, kindly type hi on the live comment section, and these will confirm that everything is working just fine. Awesome. I'm getting some good responses. Thank you, Janet. So I think it's time we start with the session right away. So there is quite a number of things that are currently happening in the markets. So just a moment, I need to check my notes here. So let's start with the economic calendar and see what happened. Remember, yesterday was a public holiday or federal holiday in the US. So they didn't have much happening. So a lot of stuff that is happening in the markets is only happening today, going forward through Friday. So as you can see, Monday, largely quiet market, bank holiday for Canada and the US. Only data point was consumer confidence in the Eurozone, which came in at -19 as expected. Then earlier this morning, New Zealand, we had PPI, which came in stronger than expected at 0.9%, basically implying that future consumer prices or this month's consumer prices might be much higher. So PPI is short for Producer Price Index. It's indicative of the prices that producers are paying. Then manufacturing PMI for Australia came in as expected at 50.1, whereas services came in a little bit stronger, but still contractionary because it's below 50.0. So monetary policy meeting minutes from Australia, there was a key highlight basically mentioning that the monetary policy members discussed the potential for a 50 basis point hike in the last meeting. So there is a good chance of going into the next meeting, the RBA or the Reserve Bank of Australia might get more aggressive with the rate hikes and potentially go for a 50 basis points hike. So as for Japan, manufacturing PMI came in lower than expected, still contractionary since it's below 50.0. There was retro reaction from the market. Chinese trade balance improved to 5.08 billion. This is the difference between exports and imports, meaning that the economy is quite vibrant. So not Chinese, but Switzerland. Apologies, Switzerland. So there was an improvement in export-import business in Switzerland. Public sector net borrowing in the UK down 6.2 billion. Of course, with the rising interest rates, you expect borrowing to get slower and slower. Then French flash manufacturing PMI, which was lower than 50 for the first time in a while, basically indicating contraction in manufacturing, whereas services were expanding. In Germany, contraction in manufacturing, services expanding. The entire Eurozone, manufacturing contracting to 48.5, whereas services were expanding to 53.0. So for the UK, there was an outperformance of the expectations, where manufacturing improved slightly from 47.5 to 49.2, approaching 50.0. And now services jumped from 49.2 to 53.3, which basically indicates a good condition. So German ZEW economic sentiment survey was up 28.1 compared to 22.8 expectation and 16.9 previously. Then the economic sentiment for the entire Eurozone also jumped to 29.7. So as a result of these news, what we saw as the key highlight for the day was basically the pound jumping as a result of the two data points. So you can see the sharp kind of thing that happened here after we had a largely quiet yesterday and nothing was moving in the markets. So the pound managed to make a big jump against the US dollar, and this has been the trend for the rest of the session. So now you should be aware that as we approach 4:30 p.m., we will be expecting another set of news that is bound to affect US dollar and also US dollar pairs. So we could be seeing this trend accelerating even higher, or basically reversing back to where it started. So it's something to be quite aware if you are one of the persons who are trading the pound USD. So I'm looking at the previous highs as potential targets here, and also today's low as a potential target if the market was to move back downwards. So with this in mind, now let's focus on the news that we're expecting for the rest of the day. So for the rest of the day, we'll be looking at one CPI from Canada. This is a measure of inflation. This will be very important. So in the previous reading, and this was December data, we saw a contraction, basically inflation becoming deflationary, or reading negative in terms of prices, or prices getting slower. On the other hand, in January, we're expecting a big spike of 0.7%. So if there's a big spike in inflation in January, let's say something around 0.7 or even higher, then the Bank of Canada may be forced to go back to the drawing board and consider an additional rate hike, and this would strengthen the Canadian dollar, whereas weakening Canadian equities. So mean CPI year over year, trimmed CPI year over year, then there's common CPI year over year. So we will be focusing on the common CPI year over year and the CPI month over month. So this way we'll be able to know annual inflation. In this case, from 6.6%, we expect this to slow to 6.5%. Then trimmed CPI is basically the core CPI. So from 5.3%, we expect this to slow to 5.2%. So we will be comparing these three data: common CPI, core CPI, and monthly change. Then we also be looking at the retail sales. This is a measure of the health of the Canadian consumer. So previously, it was moving down to negative 0.1%. This was in line with the Bank of Canada expectations. But if the consumer is much powerful and we see 0.5% higher or even higher, then this basically implies that the economy is very resilient, and inflationary pressure might continue over the next 1 month. So very important data point. And now for the US, of course, the same line of manufacturing as well as our services PMI. This will be happening at 5:45 p.m. From 46.8 previously and 46.9. So we are expecting an improvement for 7.3 for services and 47.4 for manufacturing. So judging from the data that we saw in January in terms of jobs, I expect that the services sector created a lot of jobs. So we could be seeing a big spike in services PMI from 46.8 or even to 50%, 50.0. So there is a good chance we'll be seeing good performance from this. And if there's a good performance in the economy, then we might be expecting the Fed to get more aggressive, and this would basically imply a much stronger dollar. So you could be looking potentially to buy the dollar against a much weaker currency. So as we approach the end of the day, we don't have much happening after that. We'll be seeing existing home sales. This is a key indicator of the number of existing homes, not newly constructed, but existing homes that have a previous owner that got a closed deal within the last 1 month. So this will also be an interesting data point to show how the housing market is faring. So as we move on to tomorrow, we'll be looking at the wage price index in Australia. This is a key data point that the Reserve Bank of Australia is watching. And then the most important news for the week will be the official cash rate of New Zealand. So interest rates data tend to move the markets a lot. So a lot of investors will be following up to see whether there is a 50 basis points moving rates from 4.25% to 4.75%. And once you see these, you might already be seeing the market reacting to this information, which is expected to strengthen the New Zealand dollar against other pairs. So then there will be the FOMC meeting minutes in Wednesday evening, followed by the speech by RBNZ Governor Adrian Orr, and this will be at 10 p.m. Then final CPI, this is a measure of inflation in the Eurozone. This will be on Thursday at 1 p.m. Then preliminary GDP for the US at 4:30 p.m. Before we end the week with a speech from Bank of Japan governor. And in this case, we are talking about the designated one, UEDA. So UEDA was the one nominated after the expiry of Kuroda's term, which lasted the last 10 years. So this one has been going through the parliamentary process to get approval. So he'll be issuing a speech on Friday around 10 a.m. So core PCE price index also very important for the US as we focus on how quickly the prices are changing in the US, new home sales data, and also revised UN consumer sentiment report. Then as we end the week, we'll have two speeches, one from an FOMC member Jefferson, and the other one from MPC member Tenreo. So once we go through that, then it's all about looking at the key price levels and looking at the key opportunities that we expect in the markets and looking to trade that. So already the pound is quite aggressive, accelerating against the US dollar. So if you look at the dollar index, has been largely silent yesterday and also today. So there was an attempt to volatility early in the morning, but nothing much is happening here. So if one currency manages to strengthen, then it strengthens across the board. So I can bet if you look at any GBP pair, you would notice that that volatility is there. So let's just sample out. This is a pound against the Swiss franc. Notice, yes, the pound is also strengthening against the Swiss franc, and it could be happening the same way across board. So it's not exactly the same, but of course, in a similar manner, similar direction, where on one side the pound is strengthening and the other currency is weakening. So that's the effect of the news. So that's why we follow the news to understand the direction as well as the market sentiment. So as for indices, you can see they continue losing. So if you go to the 4-hour time frame, then you notice that on this particular week, market opened here, closed here, opened here, closed here, and now we are looking at a third consecutive week that the S&P 500 will be losing. So we expect this to continue happening since there's a change in perspective, where previously we were expecting that the rate hiking cycle would come to an end, where the Fed had hiked by 25 basis points, and now we expected maybe a 0 or just one more 25 basis point hike, and that would be the end of it. However, with what we are seeing happening with the inflation, retail sales indicating a stronger consumer, then there's a good chance that the Fed might be back to the drawing board and consider another 50 basis point hike or a series of 25 basis point hikes that would keep rates higher for longer. And that has the effect of weakening equities, whereas strengthening the US dollar. So while the S&P 500 has been quite resilient, if you look at the Dow has had 3 straight losing weeks. So this way, you can see the noise and how it was playing out. So opening here, closing lower, opening, closing slightly lower. And now this week has started with a straight up downfall. So yesterday, nothing much was happening. Today, a very sharp fall to this support level here. I don't think this will hold. So there is a good chance we'll be seeing the market break this area here. So I'm not very hopeful that this market will be holding this area, especially when you consider the larger term pattern that falls on the daily time frame. So you can see here that the market was trading here at the beginning of last year, and towards the end of the year, it managed to break above here on November. So after breaking here on November, in December, pushed back downwards. And then January attempted to go up and then down, but you can see that there is a pattern beginning to appear here, where the Dow is unable to form higher highs and also unable to form higher lows, basically indicating some form of consolidation. So in this consolidation, if I were to remove all this noise and all these price levels that I had marked before, then we focus on what's happening around these lows. And I'm talking about from this low, the low of this month, the low of this month, and then the current month. Then the high of the same period, the high of this month, the high of this month, then this month. Then we have something that looks like this. And now if we zoom out by going to the 4-hour chart, then you can already see what's happening. So market makes these swings and this swing, this swing, this swing. And now potentially we are looking at the market breaking this level or eventually bouncing from here. So if everything remains normal and there's no change in market sentiment, then the market continues trading according to pattern. So as a result, we would be expecting to look at for a bounce here. And that would be okay. We'll go for another long trade and trade as the market moves towards the upper trend line. But now there is a good chance that the market may actually break this area here and continue with the bearish momentum, which is evident from the larger pattern on the daily time frame, which is indicative of a bearish momentum. So we happen to see a slightly higher high here, but then after that, you can see the preceding months. The market was just contracting much lower volatility, and now volatility seems to be resuming in the markets once people start to realize that that was not the end of the bear market, and the Fed may go much higher than projected. In that case, the overall result is a much weaker equities market. So same case on the NASDAQ. So if you look at the NASDAQ here, this particular week, opens, closes lower, opens, closes almost at the same level. And then this week, it seems to be pushing further back downwards. So we had this very nice channel where the market was holding very well. So for 7 straight weeks, the market kept this channel going. But then once it was unable to form higher highs, notice this high and then this high and this high, all these highs are getting lower. From this low to this low and then this low, we are seeing potential for the change in trend. And at the same time, if you are to think as a double top person, if you are a person who likes trading the double top formation, then you can already see the M formation here. So the market is currently approaching or testing the neckline. So the neckline here remains at a price level of around 12,204. So if you happen to break these, then the overall expectation is the market keeps going further downwards. And in that case, would be basically resuming the bear market. So notice performance of the entire of last year, market pushing further back downwards. So towards the end of the year, market breaks towards the upper side. And this was January, then February, the same thing. But now after hitting this resistance, which was basically tested here, we see a continued theme where the market is pushing further downwards, and it has also broken the lower trend line. So even if we were to adjust our trend line to accommodate this low here, then we'd still have the same case of a breakout. Market breaking out, pulling back, and now continuing to push lower. So Brent oil is something that we discussed earlier this morning. So we had this sequence of candlesticks moving up. There was some volatility up and then all the way back down, but then we are seeing some continued push towards the upper side. So there is a good chance that as we see more vibrant economies in the US, Eurozone, and China, then the demand for oil will continue rising and oil will start recovering. So remember, the recovery process began some time back, and this was from the bottom that we saw in November. So after the market got to that bottom, we have been seeing a completely different pattern where the market goes up and then down, but the lows are getting higher and also the highs are getting higher, indicating some bullish momentum. So after this pullback, there is a good chance we'll be seeing some further upside in Brent oil prices. So FTSE 100, I remember talking about this early in the morning. So yesterday, we had this drop here, market pullback, traded sideways. Then today, eventually broke and pushed all the way back down before buyers came in and drove the prices up higher. But it's very clear that the market has broken that triangle and is now retesting that price. So the triangle I'm talking about is more or less like I would say a descending triangle. So market makes a swing up and then swing down, swing up, swing down. So the upper side seems to be horizontal. The lower side is higher lows. And then this was the break followed by a retest. So I'm expecting the prices to keep pushing further downwards. So as we proceed with the presentation, if you have any questions, feel free to type them in the live comment section, and I'll be responding to those questions as we progress. So hello, Clinton, Daisy, Stellon, Cheryl, and Sheila. Thank you guys for joining the session. I appreciate having you guys on the session. So let's progress. We have seen the UK 100 or the FTSE 100. So the US dollar against the Chinese currency, this is a pretty simple and direct as well as a straightforward trade. There is a key divergence between the two central banks and their policies. So early this week, the Chinese chose to maintain interest rates unchanged, whereas for the Fed, we are very sure that the Fed has been raising interest rates, and this has the strength, the result or the effect of strengthening the dollar. So after this strong bear market in the last quarter of last year, where basically the dollar was losing to the Chinese yuan, you can see a very nice pattern here that we would describe as a double bottom. So it's the same exact opposite of the other pattern that we just discussed. So this double bottom breaks the upper trend line, indicating a very common book pattern, which represents a reversal sign. So after this happened, you can see that the US dollar now started rallying against the Chinese yuan. So interest rates are level, inflation is very low in China, and at the same time, the People's Bank of China is doing quantitative easing, or even simply printing more money to support the economy. So now we are seeing this bullish momentum, and doesn't mean that you automatically go and buy the currency. So what this basically means is that if you are trading on the Chinese yuan against the US dollar, then there's a good chance that if your trade is on the bullish side, then it might be profitable compared to a person who is on the bearish side. So now that we have a bias, it's all about looking for value areas. So in this case, for an intraday trade, I would be looking for value areas along this region here. So if the price was to get to this area, then I will be looking to go along and enjoy the next leg. So value areas along the lower trend line seems to make out of sense, especially when there's a fundamental factor backing the strong bullish trend. So that's one of the key things to consider. Hang Seng index remains bearish, but then it seems like the market is choking, so we might be seeing a breakout real soon. So by choking, I mean that this particular volatility is dying out. So we can all see the big swings followed by even smaller and smaller swings. So at some point, we'll be seeing a breakout. So it's important to monitor this one. And last 3